Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, April 28, 2009. The yen gained on its rivals, especially in the overnight Asian session, as stocks in Tokyo and Australia fell on concerns over the swine flu outbreak, especially its effects on tourism and the chance it presents to deepen the global recession. The Aussie-yen pair followed through on its break of its short-term support level from last week by sliding around 190 pips to a new one-month low near 66.80. The pair then counter-rallied during the European session, but was not able to reclaim its open. It was a similar story for the yen against the euro and dollar as well, with the euro-yen pair sliding to new lows at 124.40 during the Asian session, but then bouncing back to climb above its open the rest of today's trading. The pair capped its three-session down move starting from Friday's high at about 460 pips, and by 3 p.m. Eastern, the euro had managed to pair about 50% of that. The euro is being pressured by mixed comments from ECB officials, though most analysts see the bank cutting to at least 1% when it meets next week. The late rally today was helped by strong U.S. news and a rise in U.S. stocks following a down morning. The euro-dollar pair traded in a tight range overnight, and then following a pump fake to the downside that touched 1.2965, the pair began a rally in New York morning trading that brought the pair up to the 1.3165 area. As we mentioned, U.S. fundamental news came in better than expected, quieting the sense of risk aversion from overnight. A late rally in U.S. stocks helped the pair reclaim some of its losses from yesterday's session. It should be noted, though, that European stocks were lower today. In the U.S., the S&P Case-Shiller 20-City House Price Index showed prices down 18.6 in February compared to a year ago. The 10-City Index showed an annual drop of 18.8%. Even though the numbers represent weak activity, they do show an improvement compared to January. In fact, it's the first month since October of 2007 that the two composite indexes did not post a record annual decline. In two other pieces of news from the U.S., the Conference Board measure of consumer confidence rose to 39.2, much better than anticipated by economists. The future expectation sub-gauge rose to 49.5 from 30.2, a sharp increase that suggests that consumers believe the economy is nearing a bottom. The present situation index also improved from 21.9 last month to 23.7. The Richmond Fed Manufacturing Index, meanwhile, climbed higher to post a reading of -9, also far above expectations. The contraction in the sector diminished as shipments, new orders, and employment, while staying negative, were all higher than seen last month. The pound-dollar pair continued trading sideways in today's trading. Just like yesterday, the pair fell to start the session as Asian traders bought the greenback. That was followed by a rally that started in the European session and accelerated at the start of the New York session. However, after testing the area near 1.47, which was also yesterday's high, the pair's rally stalled and then began to reverse. In data from the UK, the Confederation of British Industry reported that retail sales remained broadly flat in the year to April. 44% of retailers said year-on-year sale volumes rose in the first half of April, while 41% said that they were down. The resulting balance of 3% was widely unexpected by retailers and was the highest figure since January of 2008. In Germany, preliminary data for consumer prices showed inflation was flat during April, with the annual rate up to 0.7%. Both were below forecasts and suggest that prices remain depressed as a result of the recession. The euro-pound, after sliding sharply yesterday, retraced about 50% of its fall in overnight trading, before falling yet again to retest yesterday's low near 0.8880. Similar to its behavior against the dollar, the pound, after hitting its strongest level near 10 p.m. Eastern, gave up its gains as risk appetite returned to the markets following the better-than-expected U.S. consumer confidence news. The fundamental docket heats up in the next session. First, tonight, Australia will release data on new home sales, while New Zealand posts reports on its trade balance and business confidence. Overnight, the Eurozone will post its end-of-the-month economic sentiment and business climate indicators, which include measures on consumer confidence. Tomorrow, traders will focus their attention on preliminary data from the U.S. on first quarter GDP numbers. Expectations are for an annualized rate that shows a 4.8% decline, which would be a smaller decline in growth than we saw in the fourth quarter. Also in the afternoon, the Fed will release their statement following the conclusion of their interest rate meeting. Later in the afternoon, the Reserve Bank of New Zealand will decide on interest rates with expectations of a cut to 2.5%, which would be a record low. And that wraps up today's broadcast. Thank you for joining us here at cmsfx.com, and happy trading.